Good day, everyone. You're welcome to today's live stream. Confirm you can hear me loud and clear. Please drop a comment if you can hear me loud and clear. Also confirm you can see my screen. You're welcome, you're welcome, you're welcome, you're welcome. How has been trading? I hope it's been profitable. If you have any question, any pair you want me to analyze, let me know in the comment section. If there's any pair you would want me to analyze, let me know in the comment section. If you have any question, please drop it in the comment section. You're welcome, you're welcome, you're welcome. You're welcome, you're welcome. If you have any question, let me know in the comment section. Okay, so let's get started with the calendar. Today is 4th of November 2025, and we have just a few major news coming from Australia and New Zealand. Australia has released its cash rate. They've also had their press conference. In the meeting held, that conference held 5:30 a.m. And as you can see, the cash rate, the previous was 3.60, forecast was 3.60, and the actual value is 3.60. The value remains the same. It remains the same. So that's a neutral data. It's either positive nor negative. Okay. Can you guys hear me? Can you guys hear me? Can you guys hear me? And by 10:45 p.m. Nigerian time, New Zealand will be releasing its employment change and unemployment rate data will be released by 10:45 p.m. Nigerian time. So you might want to avoid trading New Zealand pairs in London or in New York session. I would advise that you wait for this news to be released before you trade New Zealand pairs. Okay, so let's move on. Let's go to the chart. So let's start by analyzing yen baskets. Yen baskets. Can you hear me, guys? Can you hear me, guys? Drop a comment if you can hear me. Drop a comment. So let's start by analyzing yen basket. We need to know the strength of the yen to be able to know the direction or the type of orders we would execute on JPY pairs. So you can see since the market opened yesterday, the candle closed as a doji. It closed as a doji, and you can see today yen has been bullish since the market opened, and it is still bullish at the moment. Okay, now let's go down to 4-hour time frame. You can see we had this fair value gap here on 4-hour time frame, which could be the reason for this retracement. Demarks, good morning. Thanks for joining. Okay, this fair value gap on yen basket could be the reason for this pullback. But let's go down to lower time frame. After the formation of this shooting star, it's also possible that a fair value gap was created on a lower time frame. Let's confirm that. Let's go to 4 hour. So you can see on 4 hour, okay, there was no fair value gap here on 4 hour. Okay, let's go to 1 hour. Let's go to 1 hour. I'm sure there's a fair value gap. Yeah, so you can see this fair value gap here. This could be the reason. Okay, so price just filled this fair value gap. And we had a tiny, can you see this fair value gap? The market is currently trading above that, this fair value gap. There's a tiny fair value gap here. And I think price just tested this resistance. Okay, so you can see, and you can see the pattern that is forming after price tested these zones. You can see the pattern that it's forming. This is a doji, which indicates that the buyers are becoming exhausted. We had a doji. At this point, we had a shooting star. This is a bullish shooting star. And after the formation of a bullish shooting star, you're supposed to wait for the next candle to close bearish before you sell. So we have shooting star, doji. This just indicates that the buyers are becoming weaker. Okay, that's what it indicates. When bearish reversal pattern starts forming on the chart, it indicates that the buyers are becoming weaker, especially when it forms at a resistance area, at a fair value gap, or at a premium area. It's an indication that the buyers are becoming weaker, which means you shouldn't be looking for buys when you see patterns like this. You shouldn't be looking for buys, you should be looking for sells. So in this case, if 1 hour candle closes below this zone, this level, to be reasonable to risk selling yen. It will make sense to sell yen if 1 hour candle closes below this zone. Now, if you go down to 15 minutes, let's use support and resistance. Let's use support, okay? So you can see that it has created a support level. This is a key support level on 15 minutes time frame. You can see this level is a key support level. You can see because price has used this level as a support in the past. You can see at least 2 times support, support, support. You can see, so it's a key support level. So for us to sell yen, it's best to wait for price. You can see that price has been in a range on 15 minutes time frame. You can see this is the high of the range and this is the low of the range. You can see this is the high and this is the low. So if you want to sell, it's best you wait for price to break out from this support zone. Best to wait for price to break out from this support zone. And if you are selling, all you have to do here, this is 15 minutes, you have this swing low, you have this swing high. You can apply your Fibonacci tool from this swing low to this swing high. So you will be targeting a discount area, which is below level 50, which is below level 50. So your target should be, and you can see at the discount area, we have these fair value gaps. Okay, this should be your first target for if you want to sell yen. Now, we don't buy or sell yen. We just analyze the yen basket to know the direction or the trend on yen pairs, GBP, JPY, Euro, JPY. So if we are considering selling yen after a breakout from this support, we'll be looking for opportunity to buy. If yen breaks out from this support, it means yen is becoming weaker. So in the case of yen or yen pairs, because yen is the counter on most of the pairs, we would be buying those pairs. I hope that is clear. So today on yen, I am bearish. I am bearish on yen. Good morning, Mr. Raphael. If you have any pair you want me to analyze, let me know in the comment section. If there's any pair you want me to analyze, let me know in the comment section. Okay, so let's look at dollar index. Dollar index. Okay, so dollar has been bullish. Dollar has been bullish all through yesterday. Dollar was bullish. Dollar was bullish all through yesterday, and we can see where dollar is at the moment. Dollar is at a premium area. If you apply a Fibonacci from this swing high to this swing low, you can see that dollar is at a premium area. And at premium area, you don't sell. Sorry, you don't buy. You don't buy. You sell at a premium area. So you should be looking for opportunity to sell the dollar. If today's candle closes as a bearish reversal pattern, maybe an hanging man, shooting star, spinning top, then we should expect more sales on the dollar from tomorrow. That is if today's candle closes bearish. Okay, you should be looking for sales because dollar is currently at a premium area. So we had this fair value gap here. This gap has been filled. This gap has been filled. Market broke out from that gap, broke out from this resistance. Let's go down to lower time frame. I think it's trading above this resistance at the moment, or price is at that resistance level. Okay, so you can see it's currently at a resistance level. Now let's go down to, this is the daily time frame. Let's go down to 4 hour. Okay, so let's identify the resistance on 4 hour at this point, or 1 hour time frame. When trading with resistance and support, you should identify those levels on at least 2 time frames. Your resistance or support should be identified on 2 time frames so that you have what we call a zone. Okay, don't just identify just one line on 1 time frame. Okay, it should identify support and resistance on at least 2 time frames so that you have a zone to work with. Okay, so let's go down to 4 hour. Okay, so you can see on 4 hour, you can see the resistance on 4 hour is different from the resistance on the daily. So this would be our supply zone. This would be our supply zone or resistance zone. So let's see where price is at the moment. Okay, so price might still want to test this 4 hour resistance before going bearish. Okay, price might still want to test this 4 hour resistance before going bearish. Okay, so after the formation of this candle, let's see if a fair value gap was created on a lower time frame, which will be the reason for this retracement. Let's see 15 minutes. There should be a fair value gap on 15 minutes. Let's see. The price is approaching this resistance. Do we have a fair value gap? Okay. So we had one here, which got filled at this point. The fair value gap that was created here has been filled. This fair value gap has been filled. Okay. This fair value gap has been filled. Probably they want to retest this fair value gap. That's my take. They want to retest this fair value gap. Okay. So there was a strong retracement after price filled this fair value gap, and it created a swing high here. This high is an area of liquidity. So I think this is what they are coming for. They are coming for this high. There are a lot of stop losses. Most retail traders would have executed. Most retail traders have executed sell after the formation of this doji candle. And where would they have their stop losses? Their stop losses will be residing at this high. So after sweeping the liquidity residing at this high, if a bearish reversal pattern forms, it will be reasonable to sell the dollar. If after this liquidity has been swept, the bearish reversal pattern forms, then one should look for sell on the dollar. Should look for sell. Like I said, there's a possibility for them to also come to test this 4 hour resistance. So if you're going to sell the dollar, you want to ensure that your stop loss is few pips above this level. Okay, it means that if you want to trade GBP USD, it means you're going to look for buys on GBP USD, and your stop loss would be far below, let's say several pips below the most recent swing low on GBP USD or Euro USD. Okay, so that's my take on the dollar. I'd love to see the dollar sell today. My bias for the dollar today is bearish. It is bearish. There are no major news to influence price action today. So most likely the technicals will play out, most likely, since there are no major news. Unless Trump tweets. Unless Trump tweets, okay? There is no news on the calendar unless Trump tweets, okay? So let's move to the next pair, GBP USD. If you have any pair you want me to analyze, let me know in the comment section. Please give the video a thumbs up if you haven't done that. Give it a thumbs up. Give the video a thumbs up if you haven't done that. I took a trade on GU this morning. I think it has hit my stop loss. I took a buy trade on GU this morning. I think it has hit my stop loss. Let me confirm that. I think it has hit my stop loss. Yes, they've taken me out on GU 3088. That was my stop loss of 3086. They've taken me out of the market. Okay, so I'll wait for the next opportunity. Wait for the next opportunity. Okay, so let's move on. Euro USD. Okay, GBP USD. Yes, GBP USD has been bearish. It's been bearish. Let's start with the daily time frame. I believe all this is just to sweep liquidity. I think that's what is playing out in the market. This was Friday. Friday closed as a doji. Yesterday, candle closed as a spinning bottom. The normal retail traders would have bought after the formation of these patterns, and their stop losses will be residing at this low. I think I should have waited for this to occur before taking the trade. Okay, but that is past now. That is past. So we need to wait. All I need to look out for is a bullish reversal pattern to form after this liquidity has been swept. Okay, so my bias for GU remains bullish for today. I am bullish for GU. So all I need to do is wait for a bullish reversal pattern to form to execute my second trade for the day. Maximum trade I execute is two. That's the number of trade I execute daily. 2 trade maximum. So first is a loss. Hopefully the second one will be in profits. Okay. So if I buy after the formation of a bullish candle, I'm going to target these highs. These highs will be my first target. Then we have this fair value gap here that has not been filled. Okay, so this will be my next target. So let's say 3072 to 316. That's about 90 pip. 90 pip on TP. Okay, and I'm going to risk 40 pips on this trade. 40 pips on this trade. I hope that is clear. So my take still remains bullish. I wouldn't advise you sell GU. I would not advise you sell GU. If you want to sell GU, unless you've executed sell from this point. Okay, unless you've executed sell from this point or from this point. After the formation of this shooting star, this would have been a good entry, okay, to sell. If you miss this opportunity, you had another opportunity to sell from this point. If you did sell from this point, it will not be wise to start selling from this point. Okay, don't get into the trade because due to FOMO, don't enter and sell from the current market price. The risk will be too much. The risk will be too much. Okay, wait for a strong retracement. You can see it has created a fair value gap here, broke out from this support, which has become a resistance, and after a breakout, there should be a retest. After a breakout, there should be a retest. So if you insist on selling GBP USD, patiently wait for a retracement to this fair value gap or this support zone resistance. Don't sell from the current market price unless you've executed a trade at this point or at this point. If you had executed a trade at this point, then you should be considering exiting the trade or adjusting your stop loss to break even. shouldn't be taking risk on this trade anymore. If you had executed from this point, your stop should be at your break even now, or you should have exited the trade at this point. You have made over, this is over 70 pips. If you have entered from this point, you have made over 70 pips. Okay. Any question, Mr. Ebenezer? Good morning. It's been a while. How are you doing, sir? Mr. Emmanuel Yenacho. Okay, good. We'll look at gold. Okay, GU, GJ. Okay, we've analyzed GU. We'll look at gold and GJ in a few minutes. So let's look at EU before we look at GJ and gold. EU was very choppy yesterday. Very choppy. Volatility was very low on GU yesterday. Very low. Very low. Volatility was very low. So you can see, let's start with the daily time frame. So what can we see on EU? I think EU wants to come fill this fair value gap. I think EU wants to come fill this fair value gap. EU is hungry for this fair value gap. This fair value gap. Okay, this is where I think EU is coming to. 1460. That's about 50 pips from the current market price. That's about 50 pips from the current market price. Okay, so it's likely going to come fill this gap. Okay, but all I'm looking out for EU right now, all I'm waiting for is the formation of a bullish reversal pattern. Okay, in as much as the price is in this zone, if a bullish reversal pattern forms, I'll be looking for buys on EU. Okay, so if today's candle closes as a bullish reversal pattern, then we should expect more buys on GU from tomorrow. We should expect more buys from GU tomorrow, technically. I think there are major news that will be released for the dollar tomorrow, Thursday, and Friday. But technically, if today's candle closes as a bullish candle or bullish reversal pattern candle, we should be considering buying Euro USD tomorrow. Okay, so let's go down to 4 hours and see what's happening. So I think today what they've done today is to sweep the liquidity. You can see yesterday candle closed as a spinning bottom. After the formation of this spinning bottom, if you go down to 4 hour lower time frame, I'm sure a bullish reversal pattern formed on those lower time frame. I'm sure a bullish reversal pattern formed on those lower time frame, and most retail traders would have bought. Okay, let's see 4 hours. So you can see the pattern we had on 4 hour. After the close of daily candle, you can see. So we had an engulfing pattern. We had an engulfing pattern. We had an engulfing pattern. And most retail traders have executed buy. So the first thing they did this morning was to sweep the liquidity residing at the low of yesterday market. So you can see. So this is a buy setup on the 4 hour time frame. We have an hammer. After the sweep liquidity, hammer formed. The next candle also closed as a spinning bottom, which is a bullish spinning bottom. Okay, and you can see after the formation of this bullish spinning bottom, price, went up. It went up. So I think EU is still very bullish. EU is still very bullish. Let's see what's happening on 1 hour. Okay, so on 1 hour, as you can see, we had an hammer here. You can see at hammer here, we also had a fair value gap here, which could be the reason for this retracement. This fair value gap could be the reason for this pullback. Okay, and you can see we have this resistance that has been created here. So you could patiently wait for price to close above this resistance area. Okay, you could wait for price to close above this resistance area. You could also decide to take partial entry if a bullish reversal pattern forms after it has filled this fair value gap. You can decide to look for buys. Okay, just take partial entry from that point. And if price breaks out from this zone, you can take more trades. Okay, you could take more trades. Okay, so wait for a bullish reversal pattern to form on a 15-minute or 1 hour time frame, or wait for a breakout from this resistance zone before you buy. And if you are buying, your stop loss, you could set your stop loss 10, 15 pips below the low of this candle. I hope that is clear. Give the video a thumbs up if you haven't done that, and if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you would get notified by YouTube. Let's look at gold. I've made close to, I'm in profit of close to 170 pips on gold right now. 170 pips, over 170 pips on gold. My target is 400 to 500 pips. Okay, that's my target for gold. My risk on gold is 200 pips, and I'm aiming for at least 1 to 2 risk reward. 1 to 2 risk reward. That is my target on gold. I've actually reduced my risk. Initially, the risk was 200, but right now I've reduced the risk to 80 pips. The risk on gold right now is 80 pips because the market has moved in my direction over 200 and something pips. Over 200 and something pips. So I had to adjust my stop loss. I had to reduce my risk. So the risk on gold right now is just 80 pips. 80 pips. And I'm aiming for at least 400 pips. So my bias for gold is still bullish. Let's start with the daily time frame. Okay. Let's start with the daily time frame. Today is Tuesday. Yesterday, candle closed as a doji. It closed as a doji. And based on this pattern, after the weekly candle, the close of the weekly candle, you can see the pattern we have on the daily time frame. We had what looks like an hammer. We had an inverted hammer. And after the formation of these reversal patterns, because the body is bearish, you're supposed to wait for the next candle to close bullish before you buy. So you can see that's what formed here. You can see this candle closed bullish. I think this was Thursday candle. This confirms the change in trend from bearish to bullish. Also, if you look left, you would see that we had this fair value gap here, and that fair value gap got filled, and after it got filled, you can see the pattern that formed. You can see that is the reason for my bullish bias for gold this week. That's the reason for my bullish bias for gold. So after the formation of this hammer, it's likely a fair value gap was created after the formation of this bullish candle, and that could be the reason for this retracement. Let's just confirm on the 4-hour time frame. That could be the reason for the retracement. So on 4-hour, do we have a fair value gap? No fair value gap here, but let's apply our Fibonacci from this swing low to this swing high. Let's see where price is at the moment. So price pulled back to equilibrium. And you see that price pulled back to equilibrium, and after hitting the equilibrium level, look at the pattern that formed. This is a spinning bottom. This is a spinning bottom. If the current 4-hour candle closed bullish, then we should expect more buys for gold. Gold is likely going to come and sweep the liquidity. That is my expectation on gold. This is where I see gold heading to. Okay, this high. And above this high, we have a tiny fair value gap here. Okay, so I feel the institutions will want to sweep that liquidity and also fill this fair value gap before going bearish. So if I'm going to risk selling gold, I would have to wait for them to sweep the liquidity residing at this previous high. All these highs we have here also are areas of liquidity that I feel they want to sweep. So that is these are my targets for gold. Once I'm able to make 400 pips on gold, I would exit it. But as the market keeps going in my direction, I would reduce my risk. Once I'm able to make 300 pips, I'm going to adjust my stop loss to break even. I'm going to adjust my stop loss to break even. Very soon, I'm going to share this strategy with those who are interested very soon, but it's not going to be for free. Okay, I want to take my time to ensure that everything is okay, the risk management and everything is okay before I will share this with you guys. But it's not going to be for free. Notice for some time I've been asking you guys to avoid gold. For those of you who are not experienced, asking you guys to avoid it if you are not experienced, okay. But at the same time, I've been studying gold, I've been studying the movement, I've been studying it. The challenge I had with gold was the risk management area. So I had to take my time to really, fix that gold because, the volatility on gold is very high now, very high now. So I needed to tweak the risk management. The challenge I was having was where do I set my stop loss? How many people would I use as my stop loss? That was a challenge I was having with gold because on gold you cannot use 50 pips, you cannot use 100 pips. Well, it depends on the time frame. Depends on the time frame that you're trading on. But at the moment, even if you're trading 15 minutes, your risk on gold will not go below 100 pips. If you are using 50 pips, 30 pips, 40 pips, I'm sorry, your stop loss will be used as liquidity. Most of the time, your stop loss will be used as liquidity. That is why many people are hitting stop loss on gold. That's why they are hitting stop loss because they didn't consider the volatility on gold. They don't consider it. That's why they're using 50, 30 pips. Okay, so that's my take on gold. Gold is bullish. If this candle closes bullish, expect buy. Expect buy on gold. And if you want to buy, your stop loss should be the low of this candle. Your stop loss should be the low of this candle because anything that makes gold break this low of this candle should expect more sales. Anything that will make gold close below the low of this candle, there will be no need holding on to your buy. Just exit the trade. Don't fight with the market. You can't win that battle. That is why you have to use stop losses. I laugh at those who don't use stop losses. You don't know what you are doing in the market. You are not experienced. If you are not using stop loss, you are not experienced. You are not experienced. That's not the smart thing to do in this market. You have to define the risk before you execute the trade. So if you are buying from this point, your stop loss should be at this point. Now you need to calculate the risk involved. If you are not comfortable with the risk, don't take the trade. For example, if you buy from this point right now, if you buy this is 3, the market is currently at 3996.9. That's 969, and your stop loss will be that's on 630. 969 from 630. That's about 360 pips. 360 pips. So if you apply the minimum lot size, which is 0.01, with the risk of 360 something pips, I think that should be close to like $40 risk. $40 risk. And if that risk is too high for your capital, then you shouldn't take the trade. That is why I advise that if you don't have much capital, you are trading with $100, you're trading with $50, open a cent account. Open a cent account. Don't trade 0.01 if you're trading gold. Don't trade 0.01 on a $50, on a $100. With $100, if you're trading with 0.01, if the market goes against you, that should be 100 pips or 1,000 pips. I think it's 1,000 pips. 0.01 times 1,000 should be $100. You've blown that account. You've blown that account. And if you've been studying gold for the past few weeks, few months, in a day, gold can do over 1,000 pips. Gold can do over 1,000 pips. Okay, just go and do a back test after the class every day. Look at the average daily range of gold is above 1,000 pips. Okay. So that's my take on gold. GBPJPY. Since I'm considering selling yen, I'll be looking for buys on GJ. Since I'm considering selling yen, I'll be looking for buys on GJ. I'll be looking for buys on GJ. So as you can see, it is obvious. Let's start with the daily time frame. As you can see right now, GJ has been selling since the market opened. GJ has been selling. GJ has been selling. You cannot buy GJ now. You cannot buy, you cannot sell. You cannot buy GJ, you cannot sell GJ now. Congratulations to those who caught the sell from this point. Congratulations. But if you have not executed sell, if you didn't take a sell from this point, you cannot sell now. From this point, 202.70 to 200 points, that's over 200 pips. 200 pips. 200 pips. So you cannot sell GJ now. You have missed this sell. Let those that executed the trade from this point, let them enjoy the trend. Let them enjoy the move. You have missed it. Accept that you have missed it. Okay? Don't take sell. Don't buy now. For those of you who want to buy, wait for a bullish reversal pattern to form. So you can see this low is an area of liquidity. That is the reason for this sell. This lows here. The most retail traders have executed buy after this AMA candle. Most retail traders have executed buy after this AMA. And where would they have their stop losses? Their stop losses is residing at this previous low. That is the reason for this sell. This lows is the reason for this sell. It is the reason for this sell. And also there is this fair value gap here. GJ created, I think 2 or 3 weeks ago. This gap. So GJ might, it's going to fill this gap. But when it will fill this gap, no one knows. This might take weeks. Okay, but it's going to fill this gap. It's going to fill this gap. Okay, it's going to fill this gap because I believe there are some unfilled orders in this zone. There are some unfilled orders, so they would have to come and fill this gap before going bullish. That is what I'm seeing on GJ. That's what I'm seeing on GJ. Or as you know, like I said, this might take some days or some weeks. Okay, days. This is about 300. If I'm correct, yeah, about 300 pips from the current market price. Okay, so now let's go down to 4 hour. Okay. So you can see on the 4 hour, there's a breakout from a resistance, or sorry, support zone. You can see this zone on this support zone, or you can call it your demand zone. There's a breakout. Okay, there's a breakout. So I'll be looking for buy opportunity. Let's see, after sweeping this liquidity, if a bullish reversal pattern forms, I would like to see GJ pull back. Okay, you can see that's created a fair value gap here. So I would like to see GJ pull back to this fair value gap. Okay, I would love to see it pull back to this fair value gap. In between this gap, you can see we have this support stone resistance. You can see, so this would be a good area to consider selling if you want to sell, not from the current market price. So if a bullish reversal pattern forms, you might want to risk buying GJ. You might want to risk buying GJ. Okay, you might want to risk buying GJ. Okay, so I also advise that before you buy on GJ, ensure that yen basket, go to yen basket and ensure that the pattern you're seeing on yen basket is a bearish reversal pattern. Ensure that the pattern you see on yen is a bearish reversal pattern. Okay, so I think that's all. Is there any other pair you want me to analyze? I think you've looked at all the pairs you requested for to be analyzed. I think we've analyzed all that. Do you have any other question, any other pair you want me to analyze? Let me know in the comment section. give the video a thumbs up. Just one or two persons have done that. Give it a thumbs up. It costs you nothing. Give it a thumbs up so that others can get to see this video. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Thanks for joining. All right, so I think that will be all for today's class. I appreciate you all for your participation. Max, Mr. Raphael, Mr. Emmanuel, Mr. Emmanuel, Mr. Ebenezer. Appreciate you all for your participation, and I wish you all a profitable trading day. Bye for now.